Hello, happy Friday. We finally made it. Welcome to Finance Fridays. Today, joining me is Mr. Will Jackson, Senior Vice President of Small Business Access, and Mr. Keith Leonard of U.S. Bank, both of U.S. Bank, and he is a small business advisor. Hello, young gentlemen.
Hello, hello, hello. Thank you for
Hello,
having
hello.
us. We really do appreciate this every single time you bring us on. So we are ecstatic to give out as much information as we possibly can to help benefit these businesses and the community.
Absolutely. Thank you so much for joining me today. I want to jump right into it, but I want to give our audience and our viewers a little bit of housekeeping. So as you know, you can't get into the studio, but if you have questions, please put them in the chat and or comments, and we will address your questions as they come up. This is Finance Friday. Today, I want to talk about the community, our community, and what can we do to support each other? Um, we got the banks, we have CDFIs, we have small business centers and service providers. But what can we do to support each other to make sure that our small businesses get to the next level?
Well, I think I'll start off with a quote. Um, Henry Ford said, "If we're all moving forward together, then the success will take care of itself." So I think it's about understanding, number one, what resources are available to them, and then those of us who sit in these seats, we direct traffic for our business community, letting them know where things are, who's doing what, depending on how they sit in the business world from a size perspective, where they can actually go. And then they understand that the bank is not the only option that's out there. So, again, reiterating, those of us who sit in the seat, Keith, myself, other professionals, really directing traffic on behalf of the business community.
Yeah, to piggyback on what Will's saying, I like to add on to that. Think of your community first, right? Think of the individuals that sit in these positions that you can work alongside and help build your relationship with those individuals. One of the things that I like to remind people is that the current dollar only circulates for 6 hours within an African American community, compared to 20 days in the Jewish community and 30 days in the Asian community. So think about your community first, about those individuals that sit in those seats so that they can be the first of mind when you're wanting to do business.
I like it. I like it. I like it. Um, what can we do? How do we help the entrepreneurs get to the next level in our respective positions? I mean, I know what I can do and what we're doing here at BSBA, but how do we work with the banks? How do we work with CDFIs? Like, what's the best way for us to work with you guys in order to be able to serve our community?
Uh,
Um, go ahead, Will.
no, I was just going to say, to be honest, it's really about understanding the landscape, hosting things like Finance Fridays, hosting listening sessions. So we'll know exactly what the end game is of our business owners. And then once we understand what the end game is, then we'll find out, do an assessment as to where they are, and then we'll bridge that gap in getting them there. But I think it all starts out with a conversation, an open, honest conversation, and us creating an environment and demystifying um, the banks, right? And understand there are individuals who really care about the community. Like us at US Bank, we really care about the community. We're the fourth largest bank in the nation, but we're a community bank and we're a relationship bank. So it's understanding what they're trying to do and providing that roadmap on actually getting there by having real open and honest conversations.
Exactly. Well, the being really transparent and building these relationships is honestly one of the forefront of getting help for these entrepreneurs.
Mhm.
Going to build your relationship with your CPA, building a relationship with your banker, building relationships with CDFIs so that they know what your plans are, so that they can help you direct you in the way that you need to go in order for you to be successful in the future.
For those listening, a CDFI is a community development financial institution, and basically what they are is a bank that doesn't take deposits. Their credit and their underwriting guidelines are a little bit more relaxed than a traditional lender, but they're designed to
Mhm.
really get under the hood and figure out,
Yeah, come
listen
back.
to the story, right? They're here to stand in the gap, just like us. So when things sometimes as a traditional lender, we're not the best option, right? But there are times when we use or we leverage our relationships with our CDFI partners. Again, they're an enhancement to what we do. And they're here to lend money. They're here to not just lend money, but they're here to really understand what the story is, understand the mission of your business, and actually get you there.
I love that. Um, let's talk a little bit about what's the, well, I guess you kind of told us what the difference is between the traditional bank and the CDFI, but considering that 96% of Black small businesses are micro mini businesses, um, and that means that their revenue that they generate is between $30,000 and $100,000 a year. Um, it seems like the CDFI would be a better way to go for them. Um, and I could be saying this wrong, and so when one of you guys get ready to jump in because it looks like you're like, "What are you saying?"
I'm
What
like,
I'm
not
saying.
necessarily.
Okay, talk to us about that because I think
So
there's misconceptions.
CDFI, yeah, they lend on different terms other than larger financial institutions, right? If you are credit worthy, start at your major financial institution, get that immediate assistance, get those lines of credit established at these major financial institutions because they have a wider range of products that can ensure that you are not subjected to a higher interest rate when you're dealing with some CDFIs, right? We want to help out these clients. It's just the fact that a lot of major financial institutions are highly conservative. So going with that banker and being transparent and speaking to them about your current situation and being honest and open about it helps that banker determine a plan of action that can really set you apart from other entrepreneurs, right? They can tell you, hey, you need to work on your personal credit so that we can essentially get you some business credit. They let you know that your credit isn't that bad, right? These are the things that we can fix on, or if you delegate some funds here, you can eventually turn out to have a higher FICO score so that you are lendable with major financial institution, opposed to going relying on a CDFI and subjecting yourself to a higher APR. Um, these things are set in place so that we are minimizing the amount of risk that the businesses are taking. But at the same time, we are here to really help and set apart this capital that's available for small businesses that are minority owned. So
Right.
if you would love for me, I think it's a best case scenario to start with your major financial institution so that they can give you that delegation that you need because we work directly with CDFIs, we work directly with the SBA. So by starting with the CDFI, you're not knowing if that's your only course of action that you can have. By starting with a major financial institution, they can say, hey, we may not be able to assist you at this moment, but let's forward your information over to the CDFI so they can work directly with you. Let's forward you over to one of the CPAs that we deal with personally, that we know that we work with hand to hand, that's helped out with clients. So starting your relationship with a major institution is honestly, to me, the first step you should take before you go to a CDFI, before you go to a SBA, because they're going to give you the best plan of action, even if that's something that they can't help you with.
And just to add on to that, this is where your bail team comes into play. And if you
Mm-hmm.
wonder what your bail team is, I'm talking about your banker, your accountant, your insurance person, and your legal team. Now, you don't have to have all these people in place at once, but as you start to scale and grow your business, you're going to have the relationships with a banker, an accountant, an insurance agent, your legal counsel, because in all of these individuals need to be in concert on your behalf. We all need to be having conversations, knowing how you're forecasting your business, what it is you want to do. This is where the banker comes in. Hey, it needs to look like this. This is what we're doing. So everybody needs to be in concert on your behalf. And the relationship piece, I can't stress that
Mm-hmm.
enough. You have to have relationships. Come in, have a conversation with us, right? And then at the same time, you should be interviewing your banker. You should be
Mm-hmm.
interviewing your accountant. You should be interviewing your insurance as well as your legal team, because these are the individuals who are working on your behalf and with your best
Mm-hmm.
interest at heart. So if they're not engaged with what you're trying to do and what your end game looks like, then move on. This is not the only person you can deal with. So I think it's about understanding what your options are and then allowing your team to get you there.
Mm-hmm.
I love how you said that. Let's talk about managing expectations. Um, So I'm a micro mini business. I make $30,000 a year, but I need a $3 million loan. How do I do that?
Well, go
I
ahead,
need a
Keith.
$3 million business.
Look, I'm looking at Keith's
$3
face.
million
I'm like, I'm gonna let Keith
small
have this one.
business loan. That's what I need. I need you to figure out how to make that happen for me.
We want to focus on your marketing, right? We want to focus on creating the demand for your business so that
Now,
you're
what can
showing that gross revenue.
I don't want you to focus on any of that right now. I want
Hmm.
you to tell me what you can do for me. My revenue, my annual gross revenue is $30,000 a year, and I
Hmm.
need a $3 million loan.
Right.
So I think
Well,
let me say this real quick. So first and foremost, we can be completely honest with you about you want a $3 million loan, as I touched on earlier, understanding what that end game is.
Mhm.
Now, you want a $3 million loan, you make 30,000 a year. You don't really have the capacity within your business to bring on a $3 million loan. So
hmm
Keith was going to touch on something, and I'm going to allow him to finish that thought. But we have it starts with transparency.
Right.
It has to make sense, and that's what we
hmm
talk about managing the expectation to a point to where you know exactly what you're getting from your institution. Go ahead,
hmm
Keith.
But wait. Before you get started, Keith, first answer, why does that not make sense?
It doesn't make sense because you don't have the ability to pay back, right? It just gets that simple, right? If you're asking for $1 million, $3 million loan, the payment amortization is going to be broken down for you starting that next month. If you're stating that your business is only making $30,000, let's just say that your first payment is going to be $25,000. It's just not going to make sense. At the end of the day, you're going to set your business back because now you're gonna default on that loan, right? You're not going to have the ability to pay back. So you're biting off more than you can chew, and you're asking more than what you're even bringing in for, as a business for the whole year. So it's just being realistic with yourself, being transparent. Yeah, you say you want 3 million, but what do you need? What is the
What?
immediate needs? What are your immediate needs? Let's think about what do you need to operate your business to continue to help you grow revenue, right? If you're looking to, hey, I got to pay for marketing, I'm not making that much money, I'm not getting that many clients, that means that you're not getting enough marketing put out there, right? You're not creating that high demand for yourself. And that's something that you can at least focus on, change the focus on, so that you're not thinking about, well, I need to charge my clients more. No, you probably need to work on your marketing skills and delegate some funds towards that so you can create a higher demand for yourself. Because asking for $3 million when you're only making $30,000 a year is just unrealistic. Let's
Doesn't
just
make
be
sense.
real. It doesn't make any sense, right? Uh, and we want to start with business analytics. So working directly with the SBA, the BSBA, to getting those business analytics completed, so you know exactly how much you should want and how much you need in order to keep yourself operatable. So
So, Will, what is realistic?
Well,
I have my taxes. My credit
mhm.
score is 703. I don't have any late payments in the last 2 years, no bankruptcies, but I'm a micro mini. I make $30,000 a year. What is realistic? What
let,
can you do to help me?
let me start with this. So let's first start with, what are your
Your name
monthly
is Keith.
obligations? Hey, I want to
Listen,
take this real quick
listen? We
because
talk about having that team. Do you know he and I are a team? This is
I
how
didn't
we do it.
know. I
when
didn't
you
know.
say
I didn't
when you
know.
say Will, that means you saying Keith as well. Okay, so
My
Say it
bad.
again, man.
My bad. My bad.
but yeah, I just want to let you know this is a two-way street, you know.
I
So
love it. I love it. I love it.
so
Working together.
essentially, being realistic comes about. Let's run what you owe personally. Let's see what your personal obligations are. Let's see what you are bringing in monthly. Let's calculate your debt to income ratio and see what you can afford, right? Because what you want to do is, if you're thinking about a loan, you want to act like you're already paying that loan now, as if you already have the loan. If you are not making a positive DTI, which is a debt to income amount, then you shouldn't be taking on that loan. If it's going to put you over 30% DTI or 40% DTI, you need to reevaluate the amount that you're looking for. You want to put it in a comfortable amount of payment that's going to keep you operatable. And on top of that, not have you stressed out about, how am I going to get these funds? How am I going to get these funds on paying back this loan, right? We don't want to bite off more than we can chew. So essentially, calculating how much your monthly obligations are as a personal, and then calculating how much your monthly obligation is on the business side, putting that together, and then acting as if you already have the loan and seeing if you can have the ability to pay.
Because here's the thing, what we're not here to do, contrary to what people may think, we're not here to take your money. We're not here to put you in a situation that's going to be a detriment to you. We don't ever want our clients, right, especially our community, to be in a situation where they're making decisions out of desperation opposed to thinking through them. Our job is to ease that. Our job is to provide that roadmap so they can operate their business and we take care of the banking piece.
I love that. I'm asking these questions. Part of it is educational, right? Because we deal with clients all the time who have unmanageable, unrealistic expectations. And so we find a lot of times that we have to manage that. But it's good to be able to hear it from a different perspective. I can say all day, you can't afford to pay that back, but I'm not a banker. I'm not about to sit here and do your debt to income ratio. They're gonna have to come and see you.
But you also too though, Selena. Here's what happens too, and it's something Keith and I we talk about a lot. Listen, sometimes you're listening to these gurus, right? You're listening to these gurus, and they're telling you, "I started this, and here's what I ended up at."
What I did.
But the problem that I see, they're not talking about the dash. They're not talking about the in between, the steps that actually take there. And then sometimes, and I'm not knocking anybody, but if we're gonna be right about business, we're gonna do business the right way.
That's right.
Our business, the folks that sit down in front of us, we're gonna give you the mechanics on how to operate your business efficiently and the correct way. We don't want you operating in the wrong direction, and then you have to circle back. Now we've lost efficiency. Now we lost some time. Now you got to start over. Now you're getting frustrated, right? You're like, oh my God, nobody's helping me, because you listened to someone because it sounded good, right? So I will say this, never listen to what anyone just has to say. Look at the behavior. And if the two don't mirror, then maybe you need to pick your ball up and go play somewhere else.
Wow. That's what we're doing today?
Yes, ma'am. Listen, this is Finance Fridays. We are telling, because honestly, this is about transforming the landscape for our community. It's about making sure that we're moving in unison, making sure that we're supported and standing in the gap for each other. But unfortunately, there's a lot of noise out there. And so I would say to all entrepreneurs, go sit down and have a conversation with your banker. Let them know, right? Let them know what you're trying to do. And once they understand what you're trying to do, then they will provide you that roadmap on getting there, right? And so, and it's not about charging you. It's not about, hey, in order for me to give you the next step, you need to pay me $49.95. We're not doing that. It's about really, really getting to the point where we're intentional and deliberate about providing quality service, building strong relationships, and establishing and solidifying our community in a good way.
I love that. So let's segue a little bit into access to capital. What are the, I don't know how, let's just go with 5 things, the top 5 things that businesses need to do to ensure that they're ready to access capital.
Okay.
You ready, Keith? Go ahead.
Yeah, I got that. Business documentation, having that essentially correct, having that right, having your articles filed, your statement of information, your amendments filed, having your EIN, your Duns and Bradstreet number, ensuring that you know that you don't have any liens placed against your business, right? So making sure you're searching up through the SOS to ensure that you don't have any liens. Reporting your business income, the revenue to net profit, reporting that you are making a net profit. Do not write off all your income expecting for you the major banking institutions to feel like you have the ability to pay. You're essentially telling us you have no money.
And then okay, we lost you for a minute, Keith.
Oh, it went out.
Yeah.
But here's the thing: you got to say, okay, number 1, and then number 2, because I'm trying to keep up with you. So I got to give me some.
Number 1, have your business documents correct. Number 2, reporting a profit on your business taxes. Number 3, personal credit goes into is considered for business credit. So having a strong personal FICO score. Number 4, working on.
Hold on.
Did I cut out?
I'm on number 2.
Okay.
Stop there for a minute.
Okay.
Why is it important to report a profit on your business taxes? because we will write everything off. We want to
Hmm.
write everything off so we can get that good refund. But how does that affect me in business?
It stops you, it hinders you from getting access to capital. When you're trying to expand for your business,
Mhm.
and you need $250,000, you need $100,000 line of credit, we take in consideration of that minimum payment with your business as if you already have it before we even get approved for it, right? So what we by having reporting income, reporting a
Mhm.
profit on your business shows us that your business is profitable and you have the ability to pay back this line of credit in case that you ever drew from it. So that's why it's super important for reporting a profit on your business, especially if you want to expand.
Because here's the thing, to add on to what Keith is saying, we look at tax returns, not bank statements. So, and this is where having a CPA in place, because you can't make 290,000 and write off 270,000, but then expect to get a $400,000 loan or a line of credit. Because when we look at your tax return, you didn't make any money and you don't have the ability to repay. So it's
Hmm.
important to make sure that those tax documents are are locked in. And Keith talked about finance, your documentation. Listen, you have to have a business bank account. You can't commingle funds. You can't have a
Hmm.
personal. Everything is running through that. You may know what it is, but when you're sitting down in front of Keith or myself, we don't know what is what. And then you have to go through and explain that, opposed to having, here's my business bank account, here's my personal bank account. So it makes sense. You have to have a business bank account.
Hmm.
All right, Keith. Very slowly.
So,
Number
so,
three.
so I can go on to number three now. All right, best. Okay, so number three. So first we had, of course, their business documents reporting
Mhm.
the profit. Now your personal credit. Your personal credit ties into your ability to pay back, right? It gives us a glimpse of how you deal with lines of credit, how you deal with with the access to capital that you already have on a personal side. So think of it like this: if you have a $300 secure card, then you come into the bank and you ask for a $20,000 credit card. Don't expect for that to happen. The reason is because we take in consideration of what type of lines of credit you have on your personal side and
Mhm.
what you're trying to ask for on your business side. This individual is saying, I want $20,000 access to capital on a credit card, but they never had a $20,000 line on their consumer side. So those expectations of having, I want $100,000 line of credit, like what you hear on YouTube and TikTok. You can get access to $100,000 credit card. You can get $25,000 over here. Don't expect that if you never had a $25,000 credit card on your consumer side, because we use that to consider what type of lines you already been using, your ability to pay, and your payment history.
That's great information. What we do here is we try to provide the real, so that when
Mhm.
you know it's probably people who will watch this and say, that makes perfect sense. No wonder I got denied, because no one
Hmm.
sat down and given them, explained to them, the ins and outs of what we're doing. So I appreciate how easy you're making it to understand, but also just the fact that you all are willing to have this conversation.
Of course, of course. Number four. So the magical three letter statement, DTI, right? Debt to income. If you are making $500,000, beautiful. But if you're reporting that it costs your business 560,000 to run, that's a negative net, right? And on top of that,
Mhm.
if you're putting yourself in debt, if you have a lot of monthly obligations, that's creating a higher debt to income ratio. If you have a auto loan, if you have a lot of personal loans, if you have a lot of high utilization credit cards, if you have a mortgage, those things are considered to go against your DTI. So you want to be mindful of where you're placing your debt. And some of the things you can leverage is having a business, right? Consuming some of that personal debt that you use to fund your business over to your business debt. So you're lowering your personal DTI. Hmm.
Again, great information, things that people don't think about, you know, because again, we're in business, we're trying to run the business, and then,
Hmm.
we were talking about this last week. I'm trying to run my business, and oh man, I need a loan yesterday. And then if you don't have these things in place, what's the likelihood that you're going to be able to get a loan? So
Right.
I guess I'm gonna let you do number 5, and then I have one follow-up question to all of this, and then yeah, we'll go from there.
Number 5, I will feel like getting access to capital is through relationships, right? Having a direct relationship with your banker, right? Having a direct relationship with individuals who work with CDFIs, having relationships with your CPA so that they can amend taxes in case that you don't pay it if you didn't pay enough or you reported too much or too little. Um, Creating a relationship with your banking institution, right? That's created because every banking institution has an internal relationship score, and those scores are accumulated off of how many products you have with them, the history, the length of duration you've been banking with
Hmm.
them, and the amount of funds you have carrying with that banking institution, right? By having those things combined, all of these 5 things, it should not hinder you from getting access to capital. At this point, you should be able to go to a lot of financial institutions and be able to qualify for all of them if you met all 5 of those steps.
And then I also just add in also the reason why the relationship with your financial institution, your banker, is extremely, extremely important. It's because now you have someone who understands your story. And now you have someone on the inside who can advocate on behalf of you if there are any gaps and you want to have that. So I know historically folks don't trust banks. I get it. But I think we're in a day and time where you have individuals who are truly committed on ensuring that our business community wins. And so have it come in, have a conversation. It costs you nothing. Come have a conversation. Again, it's about interviewing the person in the institution that you feel most comfortable with to help you in the most important piece of your life, which is your business, especially as an entrepreneur.
I love that. So this is the final question. We got 2 minutes, and the question is, and I think we've kind of discussed this. Why is it better to apply for a loan, or to prepare to apply for a loan when you don't need it, as opposed to when you need it?
Go get
Mm.
them, Keith.
Okay, think about it like this. Every car, when you buy a vehicle, it's good to have insurance.
It's
You may
great.
not you may not need it at that moment. You may not need it next week. You may not need it in a month. But it's always beneficial to have insurance because there's a saying, it's better to have and not need than to need and not
The
have.
need and not have.
So if you are looking to, let's say, a loan or a line of credit, right? A cash flow manager, per se, getting access to a cash flow manager doesn't automatically put you in debt. What it does is give you
Mm.
access to capital of when you need it, when you need it the most, right? One of the things that they tell us with businesses is you want to keep as much income and liquid capital as possible,
Mhm.
and delegate as much debt as you possibly can as long as you can, right? Because you have something that's benefiting you, and that's being a business. Consumer taxes and business taxes are 2 different places.
Mhm.
You get way more benefits from being in business taxes, and when you work with your CPA, they can explain the differences and give you that insight that you deserve to have when you are having that when you do establish that relationship. That's why, for me at least, I recommend getting access to these credit lines immediately. Nobody is saying go max out the credit card. Nobody is saying
Mhm.
to use it to put yourself in debt. What we're saying is get it to establish the history, get it to pay for your minor bills, the things that you're monthly
Mhm.
obligated to,
Mhm.
because we're not asking for you to build credit to pay us interest to do so. We're asking to create a relationship and use us to be your main provider to for access to capital, right? We want you to leverage us as much as possibly can, but we're not saying, hey, you have to pay us interest to do so. So essentially, having the access to capital and not needing is the best thing I can recommend.
Yeah, and I think because businesses, we go through ebbs and we go through flows, right? Sometimes
Right.
it's really good and sometimes it's bad, but to have that security blanket there
Hmm.
would make a big difference for a lot of different businesses. I know for me, it would be a wonderful thing. Um, I am going to let you have the last word, Will, because we are at 30 minutes and 42 seconds. And I know you have something profound to say.
I just want to say this. In everything, you have to prepare. In Latin, there's a quote that goes, "Amit victoria corum," which means victory loves preparation.
Mm,
So if we prepare now and do what needs to be done now, when we need things, we're already ready. So again, Amit victoria corum. Victory loves preparation. And on that note, it has been one great week. Finance Fridays. Thank you, BSBA. Keith, thank you. It has been real.
It's been real.
All right, you
Thank you
guys,
guys.
next week. Thank you
You
both for
All
take
right.
joining us.
care.
Have a good one.